So in this video, we're going to talk you through how we select, source, and bring the property investments that you see listed on our site to the platform. We're not a property listing website, so our job is to find what we think are the best deals in the market and bring them to you. So you're never going to see, endless listings on our website. That's not what we're about. We're about bringing you what we think is the best individual property investments in Dubai at a given moment in time. So we're joined today by Ahmad Hammoudi, who's our COO, and you play a pivotal role in that process of finding what we think are the best deals in the market. Talk us through that process.
Okay.
How does a property that's available to be invested in end up on our website?
Okay. So if you go to the website, one thing you'll notice, as we just were discussing, is the volume of listings. If you compare it to a regular property listing website, which we're not, is very small, right? So
By design.
By design, and you have to think about us as the filter that takes you from the 20,000 properties listed on any of the other brokerage websites in Dubai to the 10 properties that are listed on Stake. So, and getting from that to our 10 properties, if I'm just gonna bucket it, it's probably a 3-phase process, and it goes to sourcing, where we actually just find deals, find things that are on the market that belong to investors or owners who are looking to exit, and that generates for us basically the biggest bucket out of which we do the selection. Out of that, that filters through a screening process in which there's a pretty easy mechanism for us to say this is a go, this is not a go as a deal, and then at the end, that's when we look at a very specific set of criteria on a property by property basis that tells us whether that property is good enough to be listed on the website and sold to our investors or not. And going through each of these steps, so when we're sourcing, we have 3 primary modes of sourcing a property. We have a network of large landlords who are, you can think of them as individuals, who are in the Stake network through old personal connections, through our breadth of knowledge of the market due to our co-founders' long experience in real estate. And these are individuals who own huge portfolios of properties. So think of somebody, a person who has, $20-30 million of real estate in Dubai. At any point in time, that person is looking to exit a few of those properties. And that is our first source of, huge, large portfolios of listings. The second source is our partners, and our partners are the big brokers in Dubai. So think of your Urbans, think of your Driven Properties. Those are brokers who both manage rental properties and who are the main representatives of a lot of the landlords who do not reside in Dubai, as we know, right? So that is our second source. Our third source is owners. So there are quite a few owners who know about Stake, who have held properties for a while, and who directly come to list with us. So somebody, and we've seen this actually happen very quickly on our launch. During the first week, we got a few inbound solicitations of people saying, you know what, I saw your website. I have a property that I'm interested in exiting. I'm not that big in that big of a hurry, and can I sell through your website? So those are 3 primary sources, and I've kind of listed them from the biggest source down to the smallest source.
Right. So that's where the supply is coming in.
So that's where the supply comes in into the funnel. Think of this as hundreds of properties entering the funnel. Right? So that's your first step, and that is actually the first step anybody looking to invest is going to have to do. You're going to have to build a long list of properties that are potential investments.
And if you did this yourself, you would have to do this yourself anyway.
You'll have to do this stuff anyway.
Which is hard and takes a lot of time for a private individual 100%. Armchair investor.
100%. Plus, you're doing it you're doing it on the open market. You're going to a large listing website and browsing. You're not doing it through the the
network
that has deep connections into the scene, right? So I wouldn't say you're at a huge disadvantage, but you're starting off from a lower base, and then you have to spend all the time to actually look through all of these, and
a lot of time.
Exactly. So that's our call it our laundry list of properties, and then we have. What we aim to do is to quickly filter out those that might work out and those that might not. Because, before we get into looking into the deep details of a property, we want to also make the process efficient. So, for example, some of our quick filtering criteria is the age of the building, the developer. We focus on specific areas of Dubai. So we know Dubai is a huge city. It's not really one market. You have lots of micro markets, right? So properties that are in the marina are very different than properties that are in Sports City, than properties that are in JVC, for example, right? So we do have a set of target areas that forms another screening criteria for us. So if we do find a deal that might at face value look like a great deal, it's just not in one of the opportunity zones that we've determined, we don't look at it. And the reason we do that is it's really mostly about maximizing the probability of returns for investors. So sometimes a deal might look great, but historically, the deals in a specific neighborhood might perform well on the short term, but present a huge vacancy risk on the medium term and quite a big downside potential on the exit. So we just don't look at those. So neighborhood, developer, age of the building, mostly that's mostly how we go from the big list to the smaller list. And then once we've gone down from a few hundreds or 1,000 into tens of properties, each of those properties gets looked at on a case-by-case basis. And there's a scoring system that we use. At the end of the day, our aim is to give the best return possible to our investors. And we want to make money in the process, right? And they actually go hand in hand. The better return you're giving, the more money you're making.
Correct.
So down to the individual unit, we look at the potential return a unit can generate. We look at the tenancy history. So if it's something that might generate, it looks like it's in a great neighborhood, it's in the IFC or the marina, it's generating good return on the rental, the rent ratio. Exactly, the yield is good, but that building is historically not that well tenanted, right? So if a building has a 50% occupancy and it's in a great neighborhood, it's in a great neighborhood. It has it's generating good yields, but it has a 50% occupancy. That's a big vacancy risk that you're assuming and that you're passing over to your clients. So you don't want to do that either. So that's another criterion that we look at. Something that gets missed a lot in Dubai when people are investing in real estate is the service charges, which actually end up they eat quite a bit of your yield, right? So that's another thing. So it goes through this. Basically, you screen and then you put it through this scoring system where you look at the yields, you look at the occupancy, you look at the vacancy risk, you look at the potential return that you're going to get just from the rent over the holding period. And then the other thing we look at is the price we are entering a property at close to or discounted to the market price of that property? Because like I said, we're not just looking for the short-term yield, we're also optimizing for the long-term benefit of the investors. So a deal that is somehow discounted to the market just says that over a 5-year holding period is most likely going to climb back up to the market, which means if the market climbs, you're both getting the gain from the rise in market prices, but also from that property catching up with on that differential that was already there, right? So that's it in a nutshell.
And when we bring you the deals, this is maybe a little bit too simplistic, but I'm quite simple, so it works for me. I try and categorize our deals in 3. There's the deals that are going to bring you good yield or the rental income each year. There's the deals that have good upside, hold
Yes.
on to them for 5 years, and you're going to make a killing or a good profit. I don't want to use the word killing, a good, reasonable return
Yes.
on the exit, because we're not about get rich quick.
Yes, exactly.
And then there's probably some deals which, those rare gems that bring you a bit of both,
Yes.
or a mix of both, or good on both.
Yes.
So, and we'll try and steer you in the direction. So when you're building that portfolio, you have to take a personal decision.
100%.
Do you want to go just for yield, big exit, or do you want a nice diversified portfolio? So what we're going to try and do is throughout the year bring you a selection of things that you can continue to invest in.
Yes, we want to give you the ability to diversify as much as possible. So yes, we do try to filter a lot, but at the same time we try to keep a good selection of properties on the site. So at any point in time, we want you to be able to say just exactly what you just described. So I want to put 2,000 dirhams in a property that is going to generate good yields, but I also want to put another 5,000 dirhams in a property that I'm going to forget about, but on the exit in 5 years, I'm going to get a nice return.
I think this is helpful, because I think this is a really helpful guide in terms of helping people understand when they come to the platform that there's always going to be more than there's going to be a choice that they can make on properties. So it helps them understand, is this the type of property that meets my personal needs? Am I looking at exiting everything in 5 years and cashing out, or do I want to build that? Because property, unlike other asset classes, gives you a bit of, there's the appreciation of the asset, but also the rental income, which is why it's a fantastic asset.
Yes. What we would ideally love to do at some point is to help you build that portfolio, right? So right now what we do is we give you a lot of information once you're on the site. I guess the after that, so we've kind of described the process of finding a property and selecting it, right? But what we didn't cover what we do after that. So before we go from a selected property that we like to an actual property listed on the site, there's an additional kicker that we do to try to make it better for investors, which is we haven't negotiated yet, right? So we find something that we like, that we're actually willing to go for at the price, but you never know, right? You can always get a few extra 5 or 10% on the asking price with your negotiations, and that's actually where that goes back to the strength and experience of our co-founders being in this market for such a long time, and this is the bread and butter of it.
To negotiate the better deal.
So after all that is done, then we have to, we're sort of doing the due diligence on an investor's behalf, but we also need to be, we want to give these investors all of that information, right? So it's not that we're telling them, we did our DD, this is great, buy it. No. We're saying we did a lot of work to select this property, and here is all of the work that we did. So on the website, you can see all of the calculations that were done. You can see all of the data that we used to select the property. You can see quite a detailed, for every property, we write a quite detailed investment memo that has all of this information that tells you why the property was selected, what discount you're getting vis-a-vis the market prices. We give you different scenarios. So if you're somebody looking for yield or appreciation, there is a part of this investment memo that tells you, this is what we think is going to happen, but by the way, nobody has a crystal ball, and the market can go in different ways. Here are the 4 or 5 different scenarios of your outcomes. So that lets you kind of see, that lets you sort of build the floor on how bad an investment can go, and sort of a ceiling on how good an investment can go. And if you look at these different sensitivity analyses across different properties, you'll be able to, okay, if I do a little bit here and a little bit there, my worst case scenario is going to be this much. My best case scenario is going to be
this much. Ahmed, thank you very much.
Thank you.